Okay, there we go. So M&A stands for, let me get this chat window going, mergers and acquisitions. So M&A accounting is kind of what you would have to be doing right now with this balance sheet. The problem is that M&A accounting is actually a specialty within accounting. So what does that mean? It means, to put it frankly, I can't teach you how to do an M&A on a balance sheet in 2 days, nor am I an M&A accountant. So I can tell you the gist of how it works, but I don't actually want to give you the specific finite details because I could be wrong. Okay? So, Mr. Power, why the hell are we doing this? What are we doing then? Great question. The focus of this assignment has always been on a little bit of everything. Understanding cash, debt, and equity. Understanding the difference between a merger, an acquisition, and a spinoff. And then understanding the consumer side, the Department of Justice trying to declare it anti-competitive, and investors trying to keep investors happy. That's a blend of everything I wanted to cover and I wanted to get you guys thinking about as business owners. And then the process of operating and balancing a balance sheet. That's important, okay? The process of merging them is easy. So that's what we've done here, all right? We are now taking the Amazon balance sheet, the Stitch Fix balance sheet, and then merging it in E. Okay, does that make sense? So 1, Amazon details, categories and numbers. 2, Stitch Fix details, categories, numbers. Then I actually put a black bar, right? I just colored column D black. That way it was like a real good super separation. 3, just merge them all, right? So the actual, sum would be sum all of this. And we haven't even addressed the acquisition yet. I just have you learning about 1, the Google Sheets equation in finding the sum, and 2, getting the new balance sheet with all their assets and liabilities. If you understand this first part of the balance sheet, process 1, 2, and then 3, just type a 1 in your chat box, please. So I've made this balance sheet process easier for you. I ripped out the concept of balancing it after you do an acquisition. My only request of you, which is not a big request because it's simple math, as long as you don't screw it up. And it's math you don't even have to do. It's math that the computer does. Total assets, right? 226,047 should equal total liabilities plus stockholders' equity. 226,047,728. 226,047,728. That means your balance sheet is balanced. That means assets, right? Assets equal liabilities and stockholders' equity. That's a balance sheet. Your balance sheet must be balanced. Well, Mr. Power, my balance sheet isn't balanced. It doesn't match. Check your numbers. You probably input numbers wrong, or you missed numbers, or your equation is wrong, right? So I wouldn't do any of the merging of any of this until you did each separate column, okay? And then you merge them over. Now, what's important to note though, okay, and what is extremely important to note when you're doing this is that yesterday we were looking at how Yahoo Finance for lack of a better way to put it, sucks for the balance sheet, right? So we looked at the Amazon balance sheet, and under deferred tax liabilities, what do we have there? What does a dash mean? What do you think a dash means? And I'd rather you guys just unmute because I'm tired of reading. I'd rather hear some new voices. So I think I allowed you to unmute yourselves. Yeah. What does this dash mean on a balance sheet? Anyone? Who's AB Albass at FLHS?
Hi, I'm just coming to check on attendance of students. How's everything going?
Hi, how are you? Everything is wonderful. Everybody want to say hello?
Hi, everyone. Nice to see everybody there. I love this class, actually. It's really wonderful.
You're more than welcome anytime you want.
This is so cool, really. I can't stay, but I really have to say thank you so much. And you know, have a great day.
You too. Be safe. Have a wonderful day. Thanks for popping in.
Thank you.
All right, guys. So I'm going to need somebody to unmute and tell me what is your best guesstimate of what this dash means. Daniel, you want to? Ethan, there you go. Go ahead, buddy.
So does it mean that like it's not available to them?
Yes,
or?
exactly. So that's the problem. That's why Yahoo Finance is trash, for lack of a better way to put it. That's why you should really try to find the actual balance sheet from each business, similar to what we found with Stitch Fix. This dash actually means we don't have the information. That's what it really means, is we don't have the information. So look what happens. Non-current liabilities is long-term debt plus other long-term liabilities. Can somebody please tell me what this number plus this number means? Equals, I'm sorry. You gotta just like do some quick math. This and this, does it equal that? No, not even close. We're like $39 billion off. So this dash doesn't mean zero. This dash actually means not available. So if you're using Yahoo Finance, you actually might not have a balanced balance sheet if there's a dash there. So be very careful. Let me show you what I mean. If you look at my balance sheet, I finished creating the Amazon balance sheet, okay? Originally, this was a dash. And if it was a dash, you would not have the correct number of total liabilities because this number and this number would leave us short, right? If we do this, it should be 225 equals 225 total, right? Then we look at non-current liabilities and current liabilities. Well, I'm sorry. Non-current liabilities is 23 billion and 12 billion. It does not equal 75 billion. So what number here is missing? I did the math. The number that was missing was actually 39,791,000,000. That was the missing number. So I input that number. But the reason why is because Yahoo Finance had a dash there. So a dash does not mean $0. A dash means Yahoo Finance does not have all the data, and you might have to find the number that's missing because it's probably not going to be balanced. That's what it means. So I had to find that number. I reverse engineered it through subtraction. I found out how much I was off, and I don't even know if this is right. All I know is that's how much it was not balanced from. So my assumption is this number was actually this number that Yahoo Finance could not provide me with. Okay, so please be diligent because on the Stitch Fix one, notice there are no dashes minus this one, right? But this dash doesn't really matter because the balance sheet is still balanced. At least it's the Stitch Fix balance sheet. Okay, so you know that they're giving the actual numbers. On Yahoo Finance, the dash just really scares me because a few of the balance sheets have actually not been balanced and it's likely because of the, it's very likely because of the dash in Yahoo Finance. I blame them. So be careful of that. Please be very careful of that. Ethan, you got your hand up. What's up, buddy?
Yeah, I actually had an experience like this, so I couldn't find the accumulated depreciation for one of them, or like something above the accumulated depreciation. So I decided to do the math and then mark it in red because I checked other balance sheets and didn't have it. So I did kind of what you did.
Right. So in the real world, that's not legal, right? What I just did is not legal. What Ethan did is not legal. But what we did is necessary to balance the budget, to balance the balance sheet, because we're looking at the balance sheet and we're looking at it and saying it's not balanced and the dash must mean something. They're not giving me all the data I need. So we find the number, we put the number in. If you were the investment bank handling this merger and acquisition, this merger and acquisition, you would have access to all of this information. You wouldn't have to guess or estimate, okay? So please, I do need your balance sheet to be balanced. I don't need you making up numbers, but do what I did if you have to do that. If you are missing, if something is not balanced, number one, I spent an hour last night. My equations were wrong. It took me over an hour to make sure this was balanced because my addition was right, but I actually had this number, 27,000 in two places by accident, right? This number I had in two places. And then I didn't have all the correct addition lined up. So just please check your numbers first before you start fabricating numbers. And even the fabrication, it really shouldn't be fabricated and made up because I know that this dash meant they didn't have the number. That's why I had to find out what it is. Do not change. Like, I don't want you changing other long-term liabilities because your math is wrong. That's your fault. You have to find the issue. If you're off by a few dollars, it could be you being the problem, not the balance sheet. Balance sheets are balanced, okay? The only reason they wouldn't be is if you're on Yahoo Finance and there's a dash there. That means Yahoo Finance couldn't find the data. If you put in this Stitch Fix balance sheet, then total assets will equal total liabilities and stockholders' equity. Do the math, it will match. If it doesn't match, your math was wrong. Okay? So then it becomes, okay, if you're doing a merger, B plus C equals E. If you're doing an acquisition, B plus C equals E. All right? If you're doing a spin-off, then you would have that equals two separate balance sheets, right? So in this case, we're taking two balance sheets and making one. In the other case, you'd be taking one balance sheet and making two. Okay? So then the question becomes, well, how do I track my acquisition? Because I'm saying I'm doing an acquisition. What we are going to do now instead is we're going to put the acquisition last. We are not going to put the acquisition inside the balance sheet. If you've done it and you've watched some videos and you've tried to figure it out and your balance sheet balances and you put it inside the balance sheet, that's fine, leave it alone. If you're stuck, this is the best way to do it. Rip out your acquisition, okay? So Amazon plus Stitch Fix equals the new Amazon balance sheet. Leave that alone. Then do this. Just give me the cost of the acquisition separately. Okay? Give me that separate. So what does that look like separate? Well, it's going to be $1 billion in cash for the cost. It's a $3 billion acquisition. It would be $1 billion in cash. It would be $1 billion in long-term debt alone, and it would be $1 billion in additional paid capital, which is $1 billion in stock. So we are kind of just saying it's going to be a $3 billion purchase. That's what we're going to say here. It's going to be a $3 billion purchase. 1 billion cash, 1 billion in long-term debt, so a loan at 1%, and then 1 billion in stock. I don't need you changing balance sheet numbers at all. Just leave it on the side. Since I'm not a mergers and acquisition accountant, I don't want to tell you the wrong way to do this and have you guys actually try to do this. Okay? Type 1 if you understand. Okay. So then determining how much cash you want to use is easy. Look at the balance sheet. How much cash do they have? What are you willing to use? That's fine. Then we go down and we say, all right, long-term debt. Well, looking at long-term debt, do you want to do bonds? Do you want to sell bonds? Or do you want to take out a loan? That's going to determine where on liabilities it falls. Okay? So first you have to do some research on whether you want to do sell bonds or take out a loan. Find out what percentage you want to sell them at. So you might have to look at the rating of your company, right? So go to the credit rating if it's a AAA company, if it's triple B plus, if it's double B, which means it's speculative and junk. Well, believe me, if it's a spec junk, you're gonna have to pay a higher percentage than if you're a double A plus, okay? And you can give me a range. I'm not gonna stick you guys to it. So loan at 1 to 2%. All right. Then we get down to, well, first, the cash is easy. The loan is relatively easy with some research if you do a loan or a bond. That gives you 2 billion. If that makes sense so far, give me a number 2. If that makes sense so far, give me a number 2. Good. The last piece is number 3. I'm actually going to let you guys look at this and tell me if this makes sense. So just look at this part right here. All right. And tell me if that makes sense. I'll give you guys about a minute to analyze it and tell me what you think it means. In the chat window, write an explanation of what you think it means. I'll mute myself for about a minute. Okay, so that was probably about 3 or 4 minutes, but I wanted to make sure you guys had some time. Now, we gave 1 billion in cash, 1 billion in a loan. What is the third billion going to be used as? How are we going to give them 3 more billion? As what? Yeah, so the other billion is going to be equity, which is going to be stock in Amazon. So we have to find out how much Amazon stock we're going to be giving them. Again, we're not touching the balance sheet anymore. We're just figuring out how much stock do we owe them. We owe them 1 billion in cash. We owe them another 1 billion in cash, so we're taking out a loan, right? So they get their 2 billion. Then the third billion is going to be in stock. So how do we do that? So I'm actually going to put actual value here instead of it being in thousands, because the whole balance sheet's in thousands. I'm going to do this in actual stock value so I know how much I actually have to give them, right? I don't want to start playing with times thousands or millions or anything like that. So they have to get $1 billion. So 1 0 0 0 0 0 0 0 0 0. Their current Amazon stock right now, Amazon stock is at 1,296. Okay, well, I actually did, 2,296. So that's the value of the stock today. If this was the day we closed the deal, this is the stock price today. We would do 1 billion divided by this equals this many shares we have to issue them. So we would have to give Stitch Fix shareholders that many shares of Amazon. Okay. So, right. So we're doing F54, which is the dollar value, divided by F53, which is the dollar value, $1 billion, divided by F54, which is the current stock of Amazon, equals the number of stocks issued to Stitch Fix shareholders. This is all you have to give me. 1 billion in cash, 1 billion from a loan, and then 1 billion in stock with this calculation. Ethan, question, what up?
Yeah, so for the cash part, I'll have 2 questions. One for the cash and one for the equity part.
Let it rip, dude.
For cash, if the buyer has less cash than the person that it or the company is buying, does that like how should I go about that?
So this would be, hold on, acquirer,
Yeah.
and this is the target.
Okay.
Okay, so we would do, let's just italicize that. So the acquirer is Amazon. The target acquiree is Stitch Fix. So ask your question again using those terms.
All right. So what if the acquirer has less cash than the target?
Has less cash. That's not really an issue, because the acquirer probably has more assets. There's no way the acquirer can purchase the target if the acquirer has less assets than the target. You know what I mean?
All right.
So more likely than not, the acquirer has a lot more assets somewhere. Maybe not cash, right?
So I
But
should
likely
use
has a lot more
assets.
assets.
So assets would be instead of cash for me then.
No. You can't buy someone in assets. You have to buy them in cash. So if you don't have, if Amazon, let's say Amazon didn't have the cash to spend $1 billion, right?
Okay.
Then Amazon would take out a bigger loan. You know, if you have the cash, if Stitch Fix has more cash than Amazon, that's fine, because Stitch Fix might just have a whole lot more liabilities, and you can still buy them in cash if Amazon has enough cash. But your job is to look at it. Does Amazon have enough cash? Yes. Do you want to use all cash? No. Amazon's only going to use $1 billion of their cash. If you can't make a cash acquisition or part in cash, then you can do all long-term debt, or you can do all equity, or a combination. We just did a combination of all three. We said
Okay.
this is $3 billion, just for example. We said it's a $3 billion acquisition, $1 billion in cash, $1 billion in long-term debt, and $1 billion in stock is how we're going to make that purchase.
All right. And about the equity part, stock value, is that the value for all of Amazon stock?
Say it again.
No. For the stock value, what is the definition? Is it like the
The stock
current?
value is what the stock trades at. So what
Okay.
does the stock trade at? Today, Amazon stock is down because they reported earnings yesterday. It is actually now at 2,300. Right? So let's say the acquisition went through right now at exactly 2,300. They would owe 434,782 shares. You can't give fractional shares. So if it was actually 0.6087 shares, you'd probably end up adding that value to like the cash that you have to give them. You rarely would give, you can't give a fractional share.
Okay.
All right, for this case, you can do this for me just so we can see it. So just to recap your balance sheet, the acquirer plus the target equals your new balance sheet. Then you're done touching the actual balance sheet itself. Then I would just want you guys to focus on how does it happen? And don't do any math with this. Just tell me the funding type, 1 billion in cash. Cool, in thousands. And then this is 1 billion at a loan at 1 to 2% in thousands. So it's not 1 million, it's a billion because it's in thousands. Then over here, you're going to say actual stock value. It's not in thousands. $1 billion in stock value. What's the current value of Amazon stock? $2,300 equals how many stock, and then Amazon stock issued to Stitch Fix shareholders, 434,782 shares. That's it. So I'm trying to make your lives easier because actually doing the M&A accounting is not easy. Okay, does that make sense? If you fully get this, type a number 5 in the chat. If you get this. If you kind of get it, type a number 3, but then you have to ask me a question. Great. Only Ethan, Shannon, and Frida are even involved. That's fine with me. Tasneem, thank you, dear. So, the focus of this assignment was always, as I was saying, to get you guys to learn a few different terms. Mergers and acquisitions and spinoffs, cash, debt, and equity, and then to think in terms of consumers, Department of Justice with anti-competitive mergers or acquisitions, and then thinking about investors. Now we're doing some balance sheet. It's balanced. What are assets? What are liabilities? What's the breakdown? What are the categories? Very simple. That's why we're giving you more time. But I'm not making it as difficult because I'm not going to require you to put the actual merger process, the acquisition process into the balance sheet. Do simple math with these 3 columns, and you're fine. And then just put the acquisition and the type on the outside. Are we okay there? Okay. Questions? I think we get that. So what I do want to do is give you a few minutes. I want to open up any questions you have about anything on this assignment. Anything you have. If you don't have any, I'm going to teach you something else. So William said, essentially the balance sheet, you just combine the assets, liabilities, stockholder equity, as well as including the cash involved to acquire company. Okay, so William, for this assignment, all you're doing is B plus C equals E. That's it. That's all I want. B plus C equals E for this assignment. F is the cost of the acquisition. F is the cost of the acquisition. Yes. So Ethan, you're still doing addition for the stockholders' equity. So all this is the same addition that you were doing before. Just like assets and liabilities, do the same thing for stockholders' equity. Make the categories and do the addition. And then at the end of the day, total liabilities and stockholders' equities, which is total liabilities, which is made up of current and non-current, equal total liabilities. So current plus non-current equal total liabilities. And then total liabilities plus stockholders' equity equal total liabilities and stockholders' equity. This number, 226,047,728, equals total assets, 226,047,728. You have a balanced balance sheet. Okay, so are we good there? Now what I want to show you is my guess. I'm going to hit you with a guess, okay? I am not a forensics accountant. Would love to be. Would love to not be a teacher and do that. Sorry, guys. Would love to do M&A stuff. Like, I love this stuff. I'm hoping you love this stuff because this is really exciting, and it's actually pretty cool stuff when you actually start analyzing it. But what I want to show you is my best assumption of what would happen during this acquisition process. So my assumption, now, when you have assets and liabilities, what you do to this part of the balance sheet, which is assets, also has to be done to this part of the balance sheet in liabilities. That way it stays balanced. That's why I'm telling you it's way too much to do the M&A accounting. You know, it's difficult. This is why professionals do it. I'm just trying to get your feet wet. That's why I'm making this assignment a little bit easier. Okay? I was up till 1 o'clock in the morning finding errors in my own equation. Right? So God, I mean, you guys are 17, 18 years old trying to figure this out. I respect it. Super respect it. But some of it is not, like, I went to bed stressed out. And then I got back up and finished it and found my mistake. Like, I don't need you guys doing that. I don't want to kill you guys. But I do think what I'm going to show you is pretty cool. So I don't know if this is the real way it's done. And I did research last night. I could not find the data on exactly what happens. So I'm going to show you a few things. So there's something called goodwill when you purchase a business, right? So if when Apple bought Beats, right? What was Beats worth when Apple bought Beats? They were worth probably about $300 million. So 300, because we're doing thousands. Apple paid $2 billion for them. So the goodwill was, does this make sense? The total acquisition of Beats was $2 billion. Let's just say that's the real number. And assets for Beats was only 300 million. That means something called goodwill, your word of the day, goodwill is $1.7 billion. Can somebody take a stab on what you think that is? What do you think goodwill is? I'm not sure. Can I take a guess? Can somebody take a guess? So it's tangible versus not tangible. Assets are tangible or intangible? Are assets tangible? What does tangible mean? What's tangible mean? No, not tax deferred. Tangible, tangible. Tangible means you can touch it. Your desk is tangible. Your laptop is tangible. Physical things with value. Is love tangible? No, love is intangible. Is coffee tangible? Hell yeah, tangible. Is the mouse on your computer tangible? Your TV, the plant, the tree outside, they are tangible. They are physical things with value. Good job, William. You also have things that are intangible, right? Friendship is intangible. Love is intangible. Security, right? Feeling safe, emotions, those are intangibles. Guess what else is intangible? New markets to sell to. Brand recognition. Okay? So Google had bought. Okay, so Serena, you're talking goodwill as in when you make a donation, right? So yes, that is called goodwill. And you can write off donations on your taxes. But in this situation, goodwill is considered an intangible asset. So the assets that Beats brought to Apple was cash and inventory, which was worth $300 million. The $1.7 billion is bringing in Dr. Dre and their culture. The $1.7 billion is a financial number that Apple came up with that is why they paid $2 billion for the business. So Beats only had $300 million in value. The 1.7 is intangible value. Intangible value is goodwill. So the ability to sell to a new market, the ability to attract new clients. That's the goodwill. Intangibles. Okay. So Apple bought Beats for $2 billion. 300 million were for tangible assets. 1.7 billion were for goodwill. Does that, if that makes sense, type goodwill in the chat. So goodwill, like let's say you join VE, right? The assets in VE are the curriculum, the computers, the printers, the whiteboard walls. The intangibles are confidence building and those things that you can't touch. Right? So that's goodwill. So you take VE for the tangible things. You also take this class for the intangible things. When you buy a business, you buy a business for the tangible assets. You also buy a business for the intangible assets, which is goodwill. So William, why would Apple buy that company Mirror? Why would Apple buy Peloton? Unmute. Forget the numbers. Give me the intangibles.
Yeah. So
Okay, hold on. Let me answer Shannon first. Shannon said, how the hell is goodwill represented in numbers when goodwill is something you can't put a dollar on? Correct. Because assets are property, buildings, equipment, inventory, right? Goodwill is what you estimate. This is why it's so hard for you guys to do the merger and acquisition. In the balance sheet, it's theoretical. You are basically telling Apple doesn't have to prove 1.7 billion. What Apple has to put on their balance sheet is 300 million in Beats assets and 1.7 billion in Beats goodwill. This is what it looks like. So Amazon, in this case, is buying Stitch Fix. Amazon buys Stitch Fix for total assets of, 500. Let's just do, because let's talk about what we're still doing with Beats. Let's say this is Apple's balance sheet. We would do Beats assets. And again, this is not how it would be written on the balance sheet, but I'm just showing you for example. And then this would be goodwill, because it's got to be logged on the balance sheet. It's $2 billion that Apple is spending. You have to log it on the balance sheet. When you purchase Beats, it's got to be on your balance sheet, right? So the goodwill is an asset worth 1.7 billion. And the actual assets, like the tangible ones, are $300 million. Okay? Now here's the issue though. This information for Beats, it's under assets, but it also would have to fall under liabilities because you just spent $2 billion in purchasing the company. You just spent that money. So that's what I'm saying, is that this is difficult because you really have to show you actually have to showcase the assets you purchased, which are tangible and intangible. The assets are tangible, the goodwill is intangible, but then you have to show it in the stockholders' equity and the liabilities that it costs you $2 billion, right? So you would have to, cost of purchase is $2 billion. And now if you look again, all of a sudden 227248, 227248. The balance sheet is still balanced. So you added $2 billion in assets, you added $2 billion in liabilities, and now you own Beats. Now again, my thoughts of how that works. What makes sense to me. But what you do to the top with assets, you have to do to the bottom with liabilities and stockholders' equity. That's why this is so tough for me to get through to teach you, because I'm not an actual merger and acquisition accountant. But you do know what goodwill means. So yes, what you said, Serena, goodwill does mean on your personal taxes when you actually make donations. That's tax deductible. Goodwill during a merger and acquisition. During an acquisition, goodwill means intangible assets, which is brand recognition, new demographics to sell to, and things of that nature. Does that make sense? Once again, I know that was new. I'm not asking you guys to do that, right? I'm not asking you to change stockholders' equity. I'm not asking you to go in and do what I just did with calculating goodwill and all that. Put the Amazon balance sheet down as the acquirer. Put the Stitch Fix one down as the target. give me the new balance sheet, right? This would be new balance sheet. Then just give me the cost of the acquisition. $3 billion, you're saying, okay, great, cool. It's gonna be $3 billion. $1 billion in fund type, cash in thousands. $1 billion for a loan at 1 to 2% in thousands. Okay, I'm okay with that. Just give me something. Like, tell me where you got this idea from that it's going to be 1 to 2%. Give me the argument on your slides. Okay? And then 1 billion in stock, actual value, divided by current Amazon price equals how many shares you would have to give Stitch Fix shareholders. If you can do this, then if you really became a mergers and acquisition accountant, all of this information you just gave me would somehow end up in this new balance sheet. Since I'm not an M&A accountant, I'm not going to pretend I can tell you the exact correct way to do it. I can tell you what the real tangible assets versus what goodwill means. I can definitely do that for you. But I can't tell you how all of this works in and into what category. I don't want to pretend to do that. So I am going to make the balance sheet a little bit easier by doing this for you. Because I know numbers 3, 4, and 5 got a little bit harder because you have to find some actual data to back up your defense. And then I did give you additional time. So now you guys have till May 7th rather than having till May 3rd. Oh, man. Guys, that was a lot. We're done. Unless you have a question, you guys have a bomb weekend. Monday and Tuesday is all presentation work. You guys are going to show me your work. And we will just show it all day long and talk about it all day long. I'm not showing you anything new. I'm not changing your balance sheet. I think I'm comfortable with where we are. I think we're in a good position. I think it's a little bit easier for you. And I think that by Monday, if like, let's say Frida's 80% done, Frida, show your whole presentation. Let's go through it. Let's take your presentation. If you're showing us a 7, we're going to help you make it a 9. If Shannon brings us a 6, Shannon, we're going to try to make it a 10. Right? If Ethan's is at a 3, then I'm not going to look at Ethan's. Unless Ethan is stuck on a specific question. Does that make sense? Not to pick on Ethan. And if Serena's done and she thinks it's a 10 out of 10, good. Serena's going to show hers and we're going to rip her apart. Because again, the goal is that you guys are going to present this. The next week after you submit this, you're going to develop a script. Then you're going to record yourselves and pitch it. And we're going to share it. So the goal is that these presentations are fire. So you can use these to show your college admissions. You can use this to show for internships. You can put the link on your resume if you or on your LinkedIn. I wouldn't put it on your resume, but you can put it on your LinkedIn. You can put it on your Twitter. And now when people look at you at 18 years old presenting why these companies should merge, guys, people are going to look at you like, Jesus Christ, these kids are 18? Are you kidding me? That's my goal for you. All right. So Monday and Tuesday, come ready with something to showcase. Some of you, we can't get to everyone, but we'll do that all day Monday, Tuesday. I'll give you off Wednesday, and this is due on Thursday, the 7th. If you need me this weekend, don't hesitate. Just shoot me a text. I don't do anything with my life except, work with you guys and, work out. So I got nothing but time. All right. Reach out to me. Don't hesitate. There's no stupid questions, just stupid people that don't ask questions. If you guys are good, go enjoy your Friday. Party time. It's the weekend. All right. Guys, I'll talk to you soon. Good job. Looking forward. If you guys have any questions, don't hesitate.